Hey everybody, good morning. It's Pete. Welcome to today's Best Stock Picks. It is Wednesday, May 13th, 2020, and we saw a little bit of selling in the afternoon yesterday. Whether or not you wanted to say it was Dr. Fauci, whether or not it was overdue, all I can tell you is that it was the most selling we've seen in the afternoon in a while. But the one thing I will say from a tape reading perspective is if you know, we watch on multiple time frames, we watch the opening price, and the SPY pretty much was below the opening price most of the day. So essentially what we want to get across here is that you need to know which time frames matter to you when you're reading the tape to determine whether or not you want to be long or short, and especially long or short with conviction. We called tech stocks yesterday, and quite a few of them still followed through. So that was actually good to see. But the big thing yesterday, especially for day traders, is buying those lower openings have proven to be a really, really effective strategy. So again, it's kind of, I'm not going to say a golden rule, but certainly a trading maxim that strong stocks you buy lower openings and weak stocks you short sell higher openings. We're going to talk about a couple of those stocks today. Specifically, I want to mention though, we're not out of this trading range. I'm going to go over to the charts very, very quickly, and then we're going to come back and talk just for a minute. If you find these videos helpful, by the way, please click down and subscribe. That will mean the world to me, and you'll get updates. And if you like it, give us a thumbs up too. I'd appreciate it. So anyway, we're going to go over to look at a headline, which these kind of headlines have actually been back and forth in the market pretty much the entire market rally, where we're having a breathtaking rally, which many are just calling a short covering rally, which if you understand and you actually click on the video, we actually have it, or do a quick search. Short covering rally is when the market sells off hard, buyers come in to get out of the short sale. So it's a very fast rally that typically heads back down in that direction. But this is the part that I think is fascinating. Investors are closer to despair. I think that people lose perspective of the fact that the market was up 15, 20, 25% for a few years. And now we're kind of back to normalcy. So because we're not making all-time highs doesn't mean that we are in a really, really bad position. What we are in a bad position is on those unemployment numbers that keep getting ignored, for lack of a better way of putting it. We keep rallying on bad numbers. I know that everybody coming back into the real world, into the reopening of the country, is a incredibly, incredibly positive occurrence if it unfolds as expected, where it's safe to get back out there. I personally don't believe it is. Not going to talk about politics, has nothing to do with it. It just has to do with science. But here's where we are now. We've had this nasty sell-off. We had this short covering rally. We're kind of going sideways. So this is the part of the market where a lot of people are emailing me and posting comments, and especially new traders in the coaching program, getting a little bit confused about where we are in the big picture. And it really comes down to this. We are still sideways. And the market, this was a 2-week trading range, and we're back into another 2-week trading range. So it's very hard, unless you're on a micro time frame right now, to have conviction in the market. Now, the NASDAQ did break out. We've mentioned a lot of the stocks, a lot of the top stocks that people normally trade, excuse me, like Facebook, Amazon, Microsoft, Apple, the Qs, the QQQs, the ETF, all breaking out and getting all the way back up to those, to the March numbers. The S&P 500 has not quite done that, which, if you know Dow theory, that is actually a divergence where they're not all doing the same thing. So all of the money in the market's not on the same page. And believe it or not, 2 out of 3, 3 out of 4 could all be doing the same thing. It's that one that kind of drags the market down. It's kind of like pulling on a rope where they're not all pulling in the same direction. So it's not going to be as effective. So I'm actually going to talk a little bit about profit taking in some of those NASDAQ stocks today, move up those trailing stops. We're going to take a look at a few new long, but finally looks like we're going to be shorting the banks and some of the financial stocks with a little bit more conviction. They were kind of going sideways for a while, broke down, and we're looking for follow through at least through the rest of the week. So Wednesday, Thursday, Friday on the short side. We're looking like we might open a little bit higher in a couple of them, but again, we'll take a look at the chart in a second. Almost all of those stocks have had rallies, and almost all of them have been, and when I say rally, I mean 1 or 2 day rallies or even a higher opening. And JP Morgan actually is the number one that I've been looking to earn some money on the short side. It's been a very easy trade if you were patient enough to wait for the right kind of opening, which in this case has been a higher opening. So we're going to go to the charts and I'll show you what that means exactly. So getting into the list of stocks to short, you can see actually we have quite a few of them, but JP Morgan has been the one that I've been focused on mostly. And if you can take a look, you see earnings was here. And since earnings, almost every rally, except for maybe 1 or 2, has been a short sale. So you see every time it opened higher, it closed below the open, or for the majority of the time. And yesterday was just an unbelievable day to look for that short sale again. And I'm going to continue to look for that short sale. It looks like it's opening a little bit higher here, but JP Morgan and Wells Fargo, which has been on our list for a while, one of our members in the coaching program, William, has been harping on this one for a while. And I'm like, not yet, not yet, not yet. And finally looks like we traded through with a little bit of conviction yesterday. So again, the airlines as well. I'm not trading the airlines short. I want to make that clear. I feel like one news story can shove that short sale right in your face. I'm staying away from that right now. The banks and financials are a little bit different. We're starting to see real estate pull back a little bit, CBRE Group, as well as Nordstrom. So you have to also think, if you're looking for some ideas, what high-end companies right now, something that many might consider a luxury, are probably going to get hit in the long term. And when I say long term, I'm talking about the rest of 2020, that you might be able to make a longer term position trade where people are not spending money on those other things, right? So the banks and financials will be short sales for me today. On the opposite side, we do have a decent list of stocks to trade. And by the way, I had somebody ask, what's BPT3 mean? It means bullish perfect trade that meets 3 different criteria. And we won't get into what those criteria are, but that's essentially what it means. So we're going to take a look at some stocks. You can see some of these stocks that gapped up and continued to go. Grub, actually, obviously, with the news, Grubhub with Uber yesterday, big news. Uber didn't move. Grub did, spiked a massive amount. It was up almost 30% or more yesterday. Pulling back a little bit, but definitely a stock to keep an eye on today. Just from a technical perspective, it's had a hard time getting through this level, $58 level. So it's a long for me as long as it stays above 58. D-Dog has just been incredible. I think really more dramatic on the weekly chart here. Look at how many weeks in a row this thing has been well bid. We did spot exhaustion on the charts yesterday, which was massive spike yesterday, and another one today. I am not getting long D-Dog today. New situations, what I am doing is moving up trailing stops from lower. This exhaustion, more often than not, results in a bearish U-turn, which is trading through and coming back, or complete capitulation where we actually see some profit taking, and you can see why. I mean, that's just been a really good move, but you got to listen to what the market's telling you. You have to absolutely pay attention to the stocks that are trading massive volatility with massive volume after a significant move to the upside. And that's why I call it exhaustion, that buying pressure or selling pressure that happened to push it up to that level. Just can't sustain it anymore, because that's the reason it went up in the first place. So anyway, that's today's best stock picks. We're actually going to be looking to short financial stocks, specifically JP Morgan, Citigroup, those kind of stocks. Maybe 1 or 2 more days looking for this week. Not shorting the airlines. I feel like that is just a disaster waiting to happen to short sellers, because one good story comes out and boom, you're going to be losing your month very quickly if you hang on to that opinion. Some of these tech stocks are still strong. One that's not necessarily a tech stock, ENPH. Let me show you that one. That's been one that's been paying very, very well for us in the community, and especially as day traders buying these lower openings. These 3-4 days in a row, and I'll give you a little bit better view of it. You can see here, let me get the volume off of there. Lower opening, rally, lower opening, rally, lower opening, rally. So it's been pretty good. And Twilio also, same exact thing. Lower opening here in a rally, nice rally, lower opening and a nice rally. So whether you're day trading or swing trading, some of these stocks are still following through despite the market getting hit yesterday. And actually, Twilio is still strong. So I'm still looking at technology stocks long. It's just a question of, have they gone too far to too far to justify a new trade, but trailing them, you should not just bail because you think they've gone too far. That's a major mistake that people make. Trail your stops higher, anticipating some profit taking coming in, but don't bail because you can get another day or two out of it. Same thing with D-Dog. We saw exhaustion yesterday, had another day to the upside. So that's a good reason not to bail, a good proof not to bail. But keep moving it up, because that price action volume is a different story on the tape now. So I'm still looking long technology stocks under certain conditions, meaning the profit potential is still there and I have a good risk profile. And I am looking to see some follow through in some of those banks. So have a great day. That's what we're looking at today. And if you have any stocks that you'd like to see reviewed or some comments on stuff that we called out, absolutely subscribe and leave those comments below. Have an awesome day, everybody.